What do you do when you don't have any money to start or you run out of money and you're trying to buy more real estate? We're going through that today in this video. Or maybe you just weren't born rich. I know I wasn't. Or maybe you don't like spending more than you have to in real estate. That's what we're talking about right now, so let's jump in. Dave Ramsey would probably say you should have stopped after the first deal, even if you did a first deal, because his philosophy is always buy in cash. He's not wrong, but I don't think he's right either. It depends on you, your goals, your situation, and also if you're buying something as a primary home or as an investment property. In general, if you're buying something like real estate, most investors would tell you to put as little down as possible so that you can take that money and put it into other things that are gonna make you money instead of just locking it up into a house or letting it sit for all those years while you could be putting it to stocks, real estate, other investments to help it grow a lot faster. Especially if your goal is to try to retire early or in the earlier side, you need your money to work for you. I'll also preface by saying this, regardless of your view on Dave Ramsey, I do think keeping a doomsday bucket or a savings bucket of 3 to 6 months life expenses should be kept at all times, no matter what your situation is. It's good to get that knocked out so that you can comfortably invest in things that will make you money and don't have to worry about being in debt or running out of money or just being back at zero. This is a good thing to make sure you just get knocked out and you're ahead of. I keep 5 months of personal expenses saved in cash, liquid at all times, in a Wealthfront account. That is an online savings bank. And I know what I spend every month because I track my expenses in Mint. I was doing this before I had a bookkeeper, but now I have one now. It helps with all things real estate, but also personal expenses. So between those two tools, you should know what you spend every month, and then you should be able to put it away into a savings account that you know you can access quickly if you need it. Another side note, I keep my crypto in a wallet called BlockFi. This pays 5 to 8% interest rate depending on the time of this video being seen, but it's a good way to just make money on your money or your coins while you're just buying as they're just sitting there. And this is just additional money. They also do have options where you can put cash into these accounts that pay out, I believe, 7 to 8%. So it's an interesting option. I didn't know about it, but I heard Noah Kagan talk about it, so I looked into it and then put money in. Anyway, now that that's out of the way, let's get into some actual strategies that you can apply in your life or business today. Number one, real estate entrepreneurship strategies. And specifically, we're gonna start with number one of lease options and taking fees on lease options. Just to sum up what lease options are, is more or less a connection of two people. It is connecting someone who's looking to sell their home with someone that might be looking to lease, but then actually own a home at some point down the future. So what you're trying to do is make that connection. So if you get an owner to say they'd be willing to do a lease option tenant, then you find the tenant. It's pretty straightforward to do each side of this, but in return for doing so, you get paid a fee or an option fee for making that connection. Claire has done a couple of these. She had a coach and then had a good experience with it, but it's a great way if you don't have that much money to just get started and start making money through a real estate entrepreneurship strategy. Wholesaling, this is something we do and something that I talked more about on the channel so far and in the Facebook group, but basically it's just finding off-market deals and selling them to real estate investors so that they can either flip them or move into them or burr them, any strategy, but you don't actually have to buy the property. So it doesn't require any money out of your pocket other than maybe just some hustle to find a deal, and then you can sell it to them for a markup. The last real estate entrepreneurship strategy that doesn't require a whole lot of money is rental arbitrage or Airbnb arbitrage. You may have heard me talk about this or seen it in other places in the Facebook group. It's something that we are doing in the business today, where you are finding property or buildings that you can then rent and then re-rent either on nightly stay places like Airbnb or VRBO or Furnish Finder for 30 or 60-day furnished housing. You need to get the building or the landlord to approve this, and then you make whatever difference between the lease that you're paying and the profit you're making each month is. And in a lot of cases, it's actually a really big spread. What we're seeing is on some units that are just a studio or one bedroom, you can be making net about $1,000 a month in cash flow. All right, number two, creative financing strategies. The first one here that I don't think gets enough attention is finding a partner who can get financing on a deal when you can't, and using a strategy called a delayed payback. I'll explain what that is in a sec, but it's something that I highly recommend and a great way for two people to partner, both bringing value to a deal. Sometimes it's called a straw man partnership, but basically what it means is if you can't get a loan, you partner with someone who can. They can either front the full down payment or you can pay them maybe half before the closing. Typically that's not possible though. So the way it works is they get the loan in their name because they have a job or they have strong financials, and then after the deal closes, you can pay them back, or you can just let the first set of rental proceeds go back to them until you're both made whole, being 50-50, and then you're equal partners after that. The second strategy, I kind of think of it as a sub-strategy of partnering with someone, is maybe your spouse or a girlfriend or a family member can just get the loan in their name, but I guess specifically spouse in this case. And in that case, it doesn't matter what you have, they might have the lendability or the credit, and you can do the same strategy that I just mentioned, but use their financials to help you get the deal. All right, number 3 for creative financing strategies is lease options. Kind of like what we talked about before, but in this case, we're not talking about the fee, we're talking about actually doing it yourself as maybe a rent to buy owner. So in this case, it's more of a creative financing strategy where you are approaching either owners that have their properties for sale or not and asking if you can be a lease to buy, let's say, tenant or buyer. They won't always say yes, but in a lot of cases, they actually would consider you because they're kind of getting the best of both worlds. They're getting a tenant who's paying, and they might be able to sell the property for more down the road, especially if they get to know you and like you. If not, you can both walk away from the deal. Okay, number 4, owner financing. Sort of similar to lease options or lease to own, but a little different in the sense of you actually don't move into the property and you're making kind of a clean transaction on the front end. I like to think of it like an analogy. I never understood owner financing until someone explained it to me like this. The way I think about it is as if you were going to buy a car from a dealership. They would let you buy the car, and in some cases they would finance the car for you as well, or they would let you pay them back in chunks at a fixed rate or interest. It can work the same way in home ownership. You can buy a home from someone and then you can pay them back over time with a fixed rate interest over 3, 5, 10 years, whatever you work out with them, and you don't need a bank involved. So you don't actually have to get pre-approved for anything because you're just working directly with a seller. Number 5, subject to. This is definitely a little bit of an in-depth strategy, which we'll cover in different videos, but what it just means is you are taking over the existing loan that an owner has. So you can sometimes work with a bank or work with the owner where you just kind of take over their payments, and sometimes you'll have different requirements than either they did or what the current market is because that owner is distressed and looking to get rid of his property. Like I said, we'll go into it in other videos, but it's just an interesting strategy that a lot of people do as kind of their full-time thing. Pace Morby, for example, teaches on this exclusively, and this is like his sole acquisition model. All right, number 6, parents gifting you funds. I wasn't sure if I should put this in this category or the next one, which we'll get into, but basically, if you are buying a property, in some cases, a parent can either co-sign on the loan or just gift you funds depending on how much money you need or what your financial situation is. And it's a great option because in a lot of cases, people wouldn't be able to do deals if they couldn't get guarantees or cosigns on loans. So it's a good option if you are close to your parents or you think that you actually believe in this deal and you would be willing to take their money and not blow it. But it's definitely an option that you can consider to either get a gift or a cosign on a loan you're trying to do. All right, the last category is creative ways to get access to capital. There are probably even more than this, but these are just some of my personal favorites. Number 1, taking a loan against your 401k or retirement account. I actually don't know why this one isn't taught more, but basically, if you have a retirement account or let's say a life insurance policy, if you've been paying into it, you can take out loans against it. And in most cases, you can take that loan out and pay the interest back to yourself. So in theory, you're not even spending anything to get access to this money, and you're not using up this retirement account or this policy that you've been paying into for a lot of years. And it's a great way if you need down payments for properties or you want to buy something for cash and fix it up to get access to money. I just don't know that a lot of people are aware of it, and if they were, I think a lot more people would do it. Number 2, home equity lines of credits, otherwise known as Heloc. As simple as this, if you own a property and it has equity or it has gone up in value, meaning you've either paid some of the home price down or it's appreciated, you should be able to take out money against that property, and you can pay it back anytime you use it, almost like a debit card. What this looks like is just going to a bank, asking if you can get a HELOC. They address your financial situation and the situation of the property, and based on that, they will let you have a home equity line of credit, and you can do anything you want with the money and pay interest on it when you actually spend it. Great strategy if you use the money wisely. I don't recommend it like any of these strategies if you use it for something random or not for an investment. All right, this is similar to number 2, but this is a cash out refinance. If you own property and it has equity in it or has appreciated, you should be able to maybe renegotiate with the bank to get a new loan. This might be a new interest rate or just actually taking out cash in the property. So typically if you own a property and you have more than 20% equity in it, they will let you renegotiate or restructure a loan with that bank so that you can take out the difference between that 20% you have and anything over it. So in a lot of cases, people are able to take out money, lower their interest rate. And the cool part about this is that it's tax-free. So if you were to sell your property, you'd have to pay a broker fee and then pay taxes. But if you do a cash out refinance, you just get this cash that you don't have to pay any tax on. You can do with it whatever you want. So an example of this is, let's say you have a property that's worth $100,000 and you have $60,000 in equity, you'd be able to a lot of times take out $40,000 in a cash out refinance, because that's the difference between $20,000 in equity and the $60,000 that you have. So when you get a new loan, they'll give you $40,000. All right, going further down the path here, number 4, home equity loans. This is very similar to a Heloc actually, but instead of giving you a credit line, what they're doing is actually just giving you a loan on the full amount of equity that you have in the property. Now, with all these, speaking to a bank would be helpful, but from a high level, that's the gist. A Heloc works more like a debit card. This works more like a lump sum for the full amount. So a Heloc, you would pay back as you use it. And a home equity loan, you'd pay back almost immediately or as you kind of get that full amount of cash. All right, number 5, and the last creative strategy is actually similar to number 1, where I mentioned you could take out loans against retirement accounts. In this strategy, you can actually take out loans against your stock portfolio or your crypto accounts, which I know is kind of weird and a little random. But if you talk to your, let's say, financial advisor or whoever holds your stock or your crypto, you should be able to look into this. I don't necessarily recommend it, again, for anything random. It is a little riskier if the market were to change, but it is a way to get access to capital if you think you have an opportunity to get into a good investment and you need it and you have either stock or crypto that you can take out loans against. I would definitely look into this, but it is a great strategy if you need cash. Or if none of these work and all else fails, you can always just go about finding a mentor for free. We're gonna have a lot more videos on this later on in the show and on other episodes, but there are ways that you can find a mentor or a coach and bring them value to learn about all the strategies that don't require any money, or if you wanna save up some money and just kind of get educated, great way to do that. So you don't always even need money to get started. You can go work for someone and maybe they'll even give you equity in a deal in return for just helping them. So you don't necessarily even need money. If you don't think any of these strategies could work and you don't want to use any of them, you could just go find a mentor to teach you this stuff and kind of get behind the scenes. I don't want to leave you guys in the cold, so a couple of things you can always do is stuff like analyzing deals, analyzing markets, or really whatever they need help with. I've offered to cut people's grass, run their errands, get them coffee, if it meant that I could get around the right people that would help me kind of get where I want to be, or if they were where I want to be. I'm gonna have a whole video on this just on the mentoring concept, but if you don't believe me, ask Joe Fairless. I sent him a 15-point kind of PowerPoint along with a video just like this, talking about all the things I would do in return for mentorship, and he was very willing and accommodating to respond and help if I was looking for multifamily help. So I highly recommend it. We'll have more content on that, but just know that you don't necessarily have to pay high ticket if you don't have any money and you have energy and time that you're willing to put to working with someone. All right, wrapping things up, guys, here's the conclusion. It is so important to get momentum in real estate and business and life. So really whatever it takes to kind of keep the ball rolling is what you need to be doing. If it's finding a mentor, if it's finding a coach, if it's getting access to money with one of these deals or partnering with someone, the whole thing about this is you just can't stop. You need to keep moving, and it doesn't matter really how, even if it means just keeping getting educated. It's so easy to stop when you don't have momentum and you don't feel like you're making progress. So every day I just try to feel like I'm making a little bit of progress towards my goal, and I feel like I can see the light at the end. But on the days that I don't have that, I really do want to stop. So I encourage you guys at all costs to just keep the ball rolling. If it means reaching out to people or using these strategies to get money, there almost is always a way, and someone has done it before you. All right, guys, so that's it. Stay consistent, use any of these strategies to keep the ball rolling, get access to money, and keep doing deals. If you have any questions or need anything, you know I'm around, drop a comment below or a message in the Facebook group or on Instagram. I'm checking those at all times. I want to be there for you guys. So hope this helps. Be great. Talk to you soon.